Well, crude oil is down a bit this morning, taking a break from its surge toward a 12-month high, hovering right now just below $75 a barrel. A key inventory report is coming out today, one day late because of Monday's holiday. The American Petroleum Institute did come out with some inventory numbers, and they were down a bit, which may have contributed to the rise somewhat. Some believe there is a perception out there that a recovering economy is starting to show itself. Others say one look at the fundamentals shows the optimism is not justified. Meantime, natural gas jumped more than 4 cents in the last session, now $4.47 per thousand cubic feet is where it starts today. Gas inventory numbers also coming out today, and Elliott Gue is here from the Energy Strategist, the Energy Letter, for some perspective. Hi, Elliott.
Morning.
So we have natural gas continuing its plunge, down 15 cents. You're talking about, is this still about high inventories, still about that storage capacity factor, as well as the weather?
It is. What we're seeing is most of that weakness that we've seen over the last couple of days is in the front month futures contract, which is basically we're just coming out of a period of low demand for natural gas, kind of coming into the winter heating season. So most of the weakness has been concentrated in those futures expiring before the real onset of winter heating season. Looking out to early next year, natural gas really hasn't come down much at all, and mainly it's just speculation over what the weather's likely to be.
And it's the forecasts were supposed to be so cold, now they're coming in milder?
Well, it's been back and forth. There's an El Nino condition in the Pacific, which typically means some higher chance of a warmer than normal winter. But since then, there have been a couple reports coming out, including from the NOAA, saying that it could be there's equal chances. Basically, it could be about average.
Right. Now you're talking about you've been saying that economic data and earnings results are pointing to a recovery, and so that could spark optimism, at least, about coming increase in demand.
That's right. The main drop-off in demand in natural gas has been industrial demand, which is basically natural gas used in manufacturing and heavy industry. Obviously, that's extremely economy sensitive. We saw the largest downturn in industrial production since 1974 in this most recent recession, so that's been really the big problem. We are seeing signs, I think, that the economy is recovering. We're getting our first few earnings report out here over the last couple of days. We had Alcoa last week. We had JP Morgan yesterday. And we've got a slew of earnings reports due out this morning and also tonight.
So you're talking about earnings not just in the energy sector, just an overall economic indicator?
Right, exactly. Look at things like CSX, which is a big U.S. railroad, came out with earnings yesterday. Not a whole lot of revenue growth, but in the comments that came out in their conference call, the CEO is saying that he's seeing signs of a turn in the economy. And it's been slow at first, but there's definitely a pickup. And that should filter through into higher natural gas demand going into 2010.
So today's inventory report, what are you expecting?
On the natural gas side, 53 billion cubic foot build is the consensus. We have been coming in pretty much on average, or even a little bit lower than expected builds over the last few weeks. So I wouldn't be at all surprised to see that a little lower than the consensus. Also, we did have a real hit of really cold weather over the last week or so from time to time. So that could start to filter through as we go through next week, into some lower than expected builds.
Right. So, and you do see prices going higher for gas once winter heating season officially is underway.
Absolutely. I think you're going to see a lot of volatility, which is basically what we've been seeing. And if you go back to September, early September, natural gas price volatility is about 100%, which is about 3 or 4 times what it normally would be. Meaning you're seeing some big swings over a very short period of time. And that's really all about the immediate storage concerns. Are we going to run out of storage capacity? But as we move into next year, it's going to become much more about the state of the economy, which I think is getting better, and also the potential for it to be a little bit colder, or at least an average winter.
The NGSA is out with its winter outlook, and it says if you combine all these different factors that impact demand and pricing, economy, weather, demand, storage, and production, they all will combine to produce a neutral effect.
Well, I think it really depends upon, in their report they talked a little bit about the economy as well, and the potential for, they don't necessarily see as big a potential for a rebound in the economy as I do. I actually think we're probably going to see the economy surprise to the upside this quarter. That really all the economic data we've been getting is consistent with that. There's a lot, if you talk to a lot of investors out there, they're quite bearish about prospects for the economy. And I think that, frankly, the consensus is probably incorrect here, which is often the case. I think that we will see a quarter or two of very, very strong growth in the U.S., mainly because we came down so far. It was such a nasty recession typically after a pullback of that magnitude, you do see a quick snapback. And I think that's going to really be the main factor driving the demand side. On the production side, that is really, there's a lot of debate about that. The EIA numbers are very volatile. They're not particularly accurate. They're subject to a lot of revisions. They're also released with a 2-month lag. But the data that we've gotten so far does indicate that we're seeing a major decline in production. And I think that the real area you have to watch there, people pay so much attention to the shale plays. And certainly we're seeing growth in production from the Haynesville Shale and some of the other low-cost shale plays. But it's also all that conventional natural gas production in Texas. If you look at the EIA 914 report that comes out every month as part of the Natural Gas Monthly, that Texas production has really been falling off a cliff. And I think that that's totally due to the low prices, and that could continue for a lot longer than people expect.
Okay, tell us about oil prices. Back over $75 a barrel yesterday, down just a bit, but generally they've been rising. The Dow passed 10,000. We have a weak dollar. Is that generally what's at work here?
Certainly, those are all factors. I think that the Dow 10,000 factor is really a reflection of the economic situation we just talked about. The market, the stock market, is definitely predicting somewhat of a snapback for the economy over the next few quarters, and that's why stocks are rallying. As far as the dollar, I do think that tends to get overplayed a little bit. You hear a lot of people, every time the oil is up, they say, well, the dollar, it's because the dollar is weak. But if you look at the actual numbers, the other day oil was up something like 2 or 3%. The dollar was down something like 0.5%. I think that can be a contributing factor, but I don't think that's all that there is. I think that there's a real feeling that demand is rebounding globally, and not just in the U.S., but in your developing countries, your China, your India. And also I think there is a concern, I think there's a legitimate concern about supply. We saw a lot of companies really cut back on their spending plans this year due to the weak prices we had at the beginning of the year. And that's going to start to filter through into lower production as we move forward.
Okay. Now, DOE is out with its inventory numbers today. Yeah, usually it would have happened yesterday. But what are you expecting there?
Well, the consensus is actually looking for a build in everything except distillates, where they're looking for a small drawdown in inventories. But as you mentioned...
And that's heating oil?
Heating oil, yes. So they're looking for a build in gasoline of over 1 million barrels, a build in oil of 1 million barrels. But those API numbers suggest that we might actually, those consensus numbers might actually be too high. In other words, we might see a smaller than expected build in inventories, or in fact even a decline in inventories. That's pretty consistent with what we've been seeing over the last several months. Generally speaking, inventories of oil and gasoline and distillates are way above average, but they have been trending down gradually in fits and starts for the last several months.
Okay. We will keep watching those markets. Elliott, thanks always for stopping by.
Thanks for having me.
We appreciate it.